Every country borrows money. Rich nations, poor nations, democracies, dictatorships, and yet no country ever seems to finish paying its debt. In fact, global debt keeps growing generation after generation, regardless of who is in power, what party wins elections, or how many economic reforms are promised. That raises an uncomfortable question. What if perpetual global borrowing isn't a failure of the system? What if it is the system? Today, we're uncovering the hidden strategy behind endless global borrowing, how it began, who benefits from it, why it never ends, and why nations are trapped in a cycle they can't escape, no matter how hard they try. Setting the stage, background, and hidden foundations, 1:32, 4 o'clock. To understand perpetual borrowing, we must abandon a comforting assumption. The debt exists because governments are irresponsible. History tells a different story. Borrowing didn't begin as a flaw, began as a feature. In early civilizations, rulers funded wars and infrastructure with treasure. When gold ran out, power collapsed. Empires learned a hard lesson. Physical wealth was limiting. The breakthrough came with credit. By the 17th century, institutions like the Bank of England discovered something revolutionary. Governments could borrow money that didn't physically exist, yet as long as future taxpayers promised to repay it. This changed everything. Debt was no longer a temporary tool. It became a permanent mechanism. Key financial thinkers and institutions realized that a government in debt is predictable, manageable, and dependent. A debt-free government is autonomous. Autonomy is dangerous to financial systems built on control. The stage was set. Origins: how borrowing became endless. 4 o'clock to 7:30, the origin of perpetual borrowing lies in a subtle shift. Debt stopped being something you eliminate and became something you roll over. Instead of paying debts off, governments began refinancing them. Old loans were paid with new loans. Interest was covered by issuing more bonds. Debt never disappeared, it just changed shape. This model was perfected in the 19th and early 20th centuries as global banking networks expanded. Central banks emerged to stabilize economies. But they also introduced a critical rule. Money entered the economy primarily as debt. Governments didn't create money directly. They borrowed it from central banks or financial markets and promised to repay more than they received. This meant one thing: total debt could never be fully repaid. Why? Because interest is never created alongside the principal. From the very beginning, the math guaranteed perpetual borrowing. The rise debt goes global. 7:30 to 11 o'clock after World War II, the strategy expanded globally. Rebuilding Europe required massive loans. Developing nations were encouraged to borrow to modernize. Institutions like the IMF and World Bank were created to facilitate global lending. On the surface, this looked like cooperation. Underneath, a pattern formed. Countries borrowed in currencies they didn't control. Interest payments flowed outward. Debt locked nations into long-term dependence. As globalization accelerated, borrowing became normalized. Balanced budgets were labeled austerity. Growth became impossible without credit expansion. By the late 20th century, even wealthy nations were trapped. The United States stopped paying down debt entirely. Japan normalized debt levels exceeding its entire economy. Europe institutionalized borrowing through shared monetary systems. Debt was no longer a sign of weakness. It was proof that a country was functioning. The breaking point, when the strategy became visible, the illusion cracked during global crises. The 2008 financial collapse exposed the truth. The world wasn't built on productivity, was built on leverage. When credit froze, everything stopped. Governments didn't respond by eliminating debt. They did the opposite. They borrowed more. Trillions were created digitally and injected into financial systems. Debt exploded, but collapse was delayed. The message was clear. Debt is not a temporary emergency tool. It is the permanent stabilizer. COVID-19 repeated the pattern on a larger scale. Entire economies shut down. Governments borrowed at record speed. Central banks expanded balance sheets beyond anything seen in history. And yet, no one asked the obvious question. If debt is always the solution, what is the endgame? Fallout. Why nations can't escape. Here's the hidden consequence of perpetual borrowing. Once a nation depends on debt, stopping becomes impossible. Cut spending, the economy contracts, raise taxes, growth collapses, pay down debt, markets panic. Debt doesn't just fund governments, it props up entire financial ecosystems. Pension funds depend on government bonds. Banks rely on sovereign debt as safe assets. Markets price stability based on continuous borrowing. If borrowing stops, the system destabilizes. So governments keep going not because they want to, but because they must. Debt becomes self-justifying. Failed fixes why reforms never work over the decades. Countless solutions have been proposed. Fiscal discipline, debt ceilings, austerity programs, monetary tightening, economic restructuring, they all fail. Why? Because they treat debt as a problem, when debt is actually the foundation. Every attempted fix threatens the system itself, so reforms are softened, delayed, or reversed. Even debt forgiveness simply shifts obligations elsewhere. Nothing changes structurally. Modern parallels the pattern today. Today, global debt exceeds $300 trillion. That's more than 3 times global economic output, yet borrowing accelerates. Interest rate hikes don't reduce debt. Economic growth doesn't eliminate it. Political change doesn't stop it. Digital money makes borrowing frictionless. Central banks can create liquidity instantly. Governments can issue debt without immediate pain. Strategy has evolved, but the logic remains. Borrow forever. Stabilize through dependency. Delay collapse through expansion. The system doesn't aim to end debt, it aims to manage it indefinitely. 3 clear takeaways. 1. Perpetual borrowing is intentional, not accidental. The system is mathematically designed so debt can never fully disappear. 2. Debt creates dependence, not prosperity. Borrowing locks nations into predictable, controllable economic behavior. 3. Every crisis strengthens the strategy. Each collapse justifies more borrowing, reinforcing the cycle. Warning: open-ended thought. If global borrowing never ends, the real danger isn't collapse, it's normalization. A world where debt defines value, where generations inherit obligations, not wealth. Where sovereignty exists on paper, but dependence is permanent. The question isn't whether the system will change, it's whether people will ever be allowed to see it clearly. Call to action if this changed how you see global debt, history, and power. Subscribe, share this video, and stay curious. Because understanding the strategy is the first step toward questioning whether it should exist at all.